Hey guys, what's up? How's it going? Robin here. Welcome back for another video. In today's video, we're going to be doing a deep dive inside my Wealthsimple Trade stock portfolio. This is going to be the complete update for the month of September. I'll start off the video by giving you guys a overall portfolio update. You know, the markets have been a little bit crazy. Portfolios have dipped quite a bit, and we do have a lot of holdings in the Canadian US markets. So we'll do a quick little update on that so you guys can see how my portfolio has done. Then what we're going to do is going to do a quick little deep dive into each individual stock, every stock I hold inside my portfolio. I'll give you guys an update on that. And then we'll cover things like the dividends. I'll give you guys an update on the dividend yields. I'll show you guys the upcoming payments and different things, and basically my plan for the future when it comes to investing inside the portfolio, and basically how I've been approaching this dip that we've had inside the markets over the past couple weeks or even past couple months or so. It's been a bit of a crazy ride, but you know, we've just been doing the regular thing, putting money on a regular basis, and we're riding out the storm. So once again, guys, if you guys like this video, before we dive in really quickly, be sure to subscribe to the channel. And if you guys do enjoy watching this video, give it a big thumbs up. It really helps out and supports the channel. Alright, so the first thing we're going to do here is do a quick little update of the whole entire portfolio on Wealthsimple Trade. We'll do a quick overview of both the accounts, and then we'll dive in and I'll give you guys a deep dive of each individual stock, and we'll take a peek at how everything has been going on. So first of all, to start things off, it is Thursday, September 29th at 2 o'clock at the time of doing this video. We have $101,000 Canadian inside of a portfolio, and we'll cover the TFSA first, which has been hit pretty hard over the past couple weeks. Lots of dips in the overall market, especially in the US market overall. Our one-day return since this morning is down -2%. I did check this morning. We've seen pretty big dips in VFE, the S&P 500, as well as the Canadian markets, so that's a big dip today. Over the past week, it is down -3%, so that's about $3,000. Looks like it started in about September 22nd. And the overall month return is down -4%. So this has been going on for the past month. The past 3 months, we're sitting about evened. So we did see a bit of recovery, but that recovery is actually now being followed by a dip. So it's kind of back where we kind of started kind of thing. And the 1 year return overall is -4%. So lots of ups and downs in the markets. You guys can see it's actually pretty hectic here. But we've just been kind of investing our money on a regular basis, and that's actually really helped our portfolio kind of just, I guess, just stay neutral in a year where the markets overall are down quite a bit. Like if you take a peek at the S&P 500, it's actually down 18%, almost 20% year to date. But you know, by regularly dollar cost averaging our money, we've allowed to kind of avoid a lot of that, and of course diversifying into Canadian stocks and different things as well. But the all-time return inside the TFSA is actually at 1%, so quite a bit of a dip overall. But once again, a lot of that's coming from the US markets inside of our TFSA. Our personal account is a little bit more focused on Canadian stocks and dividend stocks to once again be more tax advantage, have that tax benefits and whatnot for Canadian dividend-based companies, as well as capital gains. If you go over the past day, it is down quite a bit too, -2%. The 1 week return is -4, so quite a bit of a dip overall. The 1 month return is down -5. Past 3 months is down -2. So this one has actually technically, I guess, been hit a little bit harder. The 1 year return is down -6%. We started this portfolio in, let's kind of go all time to see. We started this portfolio in April 22nd, 2021. So this one's a little bit newer, and obviously it's going to be a little bit more up and down than the other one. And all time it is at -5%. So it's not doing too bad either, all things considered. But once again, we're just taking that money, we're dollar cost averaging, and it's going to help us kind of just keep the portfolio, I guess, kind of treading water. And then when the markets do recover, we should see a nice gain inside the portfolio. At this point in time in the video, we'll do an update on each individual stock inside my portfolio. And once again, I just want to mention really quickly, if you guys don't already know, if you guys want to actually see my portfolio in real time and you want to kind of go at your own pace, check out Blossom Social. I do have my accounts linked on there. If you guys don't already know, it is a great app that I've been using to show my portfolio, basically document my trades, and you guys can see my entire portfolio. It's free for everybody to look at, so check out the app. There's a link in the description of this video. You guys can use that link. You can sign up. There's a referral code if you guys want to support the channel, and then you guys can go on there. You can also see my trades. You can see my portfolio, so you can either follow alongside with me as I do this video, or you can just go at your own pace. It's up to you guys how you guys want to do it. But here's my actual portfolio here on Wealthsimple Trade. Here's the individual stocks in here. So this is the TFSA, if you guys can see. So $85,000, actually let's go here, all time, $85,000 inside my TFSA, split across a couple different stocks. The main holdings are the 2 ETFs, and then we have a bunch of individual stocks to kind of balance things out. So the first one is AQN, Algonquin Power and Utilities. I've been buying this one up recently because I do see the value in the company. You know, they've dipped quite a bit, but the company has been earning quite well. They're a utilities company. I like the fact that they're expanding and they're just doing well overall. A lot of different things going on with the company. It's funny because they've dipped down quite a bit in stock price, yet this company does have a pretty good opportunity. And with the big dips right now, the yields actually are sitting at a 5% yield. So I'm kind of picking it up to hopefully, once the rebound happens, and I do believe in the long-term value of the company, we should see some nice gains there. So it obviously looks really bad, but keep in mind, everything's been dipping down quite a bit lately. So that's just one that's been hit pretty hard over the past year or two. Next up, we have is ATD, one of my favorite consumer-based companies. Limitation Couche-Tard is up 14% on my portfolio. That's a growth and dividend growth-based company. Not so much dividend yield focused, but dividend growth for sure. Same with CNR, more of a growth-based company, low dividend yield, but lots of dividend growth. So it's kind of giving us that balance inside our portfolio. And then going down here, we have Fortis. Fortis is one of a defensive utility companies. I have about $900. I want to build that up over time. It is down -3% along with the market. HDIV, we have HDIV and HYLD. These are yield-focused covered call ETFs. So they're down quite a bit with the overall markets. And keep in mind, this isn't tracking their dividend distribution. So when we see -10% here or -24%, this is just the stock price. It's not the overall return. Unfortunately, Wealthsimple Trade doesn't actually track the dividends that the stocks here are distributing. It's just tracking the actual stock price. So it looks like it's obviously hasn't done well, but keep in mind it'll move with the market, and then those dividends will get reinvested, or those distributions, I should say, and obviously, so the return will kind of balance out over time, even though it looks bad. It's just something to think about. Severia Corp is a company I bought a long time ago. I don't really want to hold inside my portfolio anymore. I want kind of just buy more safer, secure, more good quality companies. I'd rather put it in some other ones there, but I bought that during the pandemic. Obviously don't hold a lot of money, but I will look to sell that once it kind of recovers. Then we have TELUS. TELUS is sitting at almost neutral here. I've been picking up a few shares over time. We have TD, which is probably my biggest individual stock holding, doing pretty good overall. And then we have our two ETFs here. Obviously, VFB has been S&P 500 has been hit pretty hard. Like I mentioned, it is down almost like 20%, and it is our biggest holding. I think it represents like 50% of the portfolio or so. And then we have VDY, which has done a little bit better. Canadian markets haven't dipped as much, but nonetheless, it is down quite a bit. And if we go take a quick peek inside the personal account, things are going to be more or less the same. The only different stocks I hold inside the personal account, I think that I didn't mention, is CNQ. We have a couple shares here I've been looking to buy. We also have Canadian Tire. This is a new one I've added recently, and you can see it's been hit quite a bit. The overall markets are down quite a bit, so it's not unusual to see this. Manulife is down -14. Power Corp of Canada, we have a couple shares there down -22. So a lot of stocks are down right now, so that's completely normal. But like usual, it's a great time to buy a lot of these stocks right now. I think it's perfect time. We're getting a bit of a dip, and it's actually dipped down quite a bit. So I don't know what's going to happen towards the end of the year, but it's all whenever this kind of things happen, it always presents a good time to buy. So buy your stocks now if you guys have money, because it will pay off when things do rebound, whenever that ends up happening. And really quickly, we'll cover some of the buys that I made for September. If you guys want to see them in real time, I actually have it hooked up with Blossom Social now, where you guys can actually see me when I buy a stock. It'll pop up on there and you guys can see in real time when I'm actually buying. So it's a super cool feature that they have. Once again, check out the app if you guys haven't already. But just a quick little recap. So basically what I do is whenever I have some free cash sitting around, I will put them into stocks. So I've just been buying more or less what I hold inside my portfolio. Been buying lots of AQN. Like I mentioned earlier, I think it's a very good time to buy this company. I also wanted to bring it up to be a little bit more of a larger holding inside my portfolio. Because I really don't hold that much. That's been one of my goals for some of the individual stocks that I have. So I've been buying some of the individual ones here. I've been stocking up on them, so to speak. And AQN is a pretty big one I've been buying. And of course, I've been buying some of the cover call ETFs like HYLD to take advantage of the big yields they have right now. Like I think it's sitting at like a 14 or 15% yield. So we're trying to do a balanced approach here. I bought some Manulife, some more AQN, and again, some more AQN. So I've kind of trying to bring that holding up a little bit inside my portfolio. But just wanted to cover up some of the buys that I've been making in my portfolio for the month of September. And as you guys know, I use multiple portfolio trackers just to kind of show some different things, because I've yet to find one tracker that kind of holds everything. So we're using Track My Dividends to kind of get some more information here. Once again, our portfolio yield across all of our portfolios. Actually, let's do these individually. So the TFSA, which is U.S. growth focused with a little bit of Canadian stocks, has a portfolio yield of just under 3%. Yield on cost is 2.7. Annual income is 2,396. And portfolio beta is 0.57. The dividend growth based portfolio, which is our personal account, has a bit of a higher yield, which is natural, right? More Canadian dividend stocks, they typically have higher yields. 4.49%, so just under 5%. Yield on cost is 4.15. Annual income is $700. And then the summary, which is both those two accounts together, which is my whole entire portfolio, has a yield of 3%. Yield on cost just kind of a bit under that because of the dip that's happened recently. And the annual income is $3,000 in total. And we have a portfolio beta of 0.6. So that's my entire portfolio. I just want to give you guys a quick little snapshot of that. And if we go to the upcoming dividends, we can kind of see what's happening overall inside the portfolio. We'll scroll down here and you can see all the different companies that are paying me our dividends on a regular basis. So it's a lot of different ones that add up, right? For September, we had quite a bit. Going ahead to October, we have a big dividend from AQN, CNQ, HDIV, HYLD will give us a dividend of $40. So that one has been actually stocking up pretty nicely. I've been buying on a regular basis, and I don't know if you guys remember, but a couple months ago it was like $20. So we're regularly increasing that on a regular basis. We have TD and TELUS giving us some nice dividends, and VDY as well. So it's been a pretty good month overall, and we'll have a nice little month. And I think VFE will be next month as well. Just keep in mind, it depends on what companies. I do find that the trackers sometimes aren't 100% accurate. So if you guys use like dividendhistory.org or something just to double check the dates if you guys want, because sometimes they're not 100% accurate. But here's the cool little calendar to show you guys all the different dividends. It only really tracks the ones that are confirmed right now. So obviously companies will declare them at different points in time. So it's just an estimate. But nonetheless, I think it's always cool to see like the different companies and how much dividends I'm making on a regular basis. And just to give you guys a quick little update on my portfolio pie here on Blossom Social, you guys can see here that I have, like I mentioned earlier, 51% of the portfolio is in VFE, which is the S&P 500. So obviously when the US market shifts quite a bit, which it has been doing, we're going to see it inside of a portfolio. So that negative 2% has come from that today, as well as VDY, which is a good chunk of the Canadian market, has went down quite a bit. And then we have TD, which is 5% of a portfolio, and then the rest, this 12% here, is all those individual stocks I showed you guys earlier inside my portfolio. And once again, you guys can take a peek at this on here if you guys want to see more, but I just wanted to give you guys a quick little pie feature. I do tend to, over time, kind of build upon some of these individual stocks and maybe hold a little bit less holdings of some of the ETFs so I can kind of further customize my portfolio. And last but not least, inside the video, we will cover our dividend income for the month. We tallied up both of our portfolios. So our portfolios, we have, my portfolio is $240. My fiance's portfolio also gave us her dividends of $18.94. So if we combine them together for the month of September, which is month number 33 of our portfolio, we have $223, which is pretty solid. It's actually one of our better months. And we've seen the last 3 months actually have had quite a bit, some nice increases here. We have $364 in April, $173, $178, then $377, $207, then $223. So we've seen that kind of every quarter kind of increasing here. And once again, that's just us putting our money into the market, growing our portfolios, as well as reinvesting those dividends. And our total dividends here are $3,748 across the entire portfolio. So nice increases there for the month. And October should be another big month as well, since we have our big quarterly yields coming in there, and it's super exciting. So I think for October we might hit a $400 month, which would be a highest forever. That'd be super cool. So that's kind of what we're working towards. Guys, so we're approaching the end of the video. I just want to do a quick little recap here to give you guys my thoughts on everything that's been going on. So we've seen the market dip quite a bit, and like I mentioned, a couple months ago, we don't really know what's going to happen. Nobody really knows what's going to happen. But the one thing I just want to really talk about really quickly, I know that like whenever things dip, it can feel a little bit bad, but you guys got to understand, like whenever this kind of stuff happens, it presents you with great buying opportunities to really pick up stocks at great prices, and also pick up stocks that have good yields and whatnot. And that kind of benefit you get from getting the higher yields and buying the stocks at the low prices, when the markets do recover, and over a long period of time, a couple of years from now, you're really going to see some tremendous growth and some tremendous benefits if you guys can focus on buying stocks now. So I know right now with the economy, the inflation, everything, it's kind of hard to save money. But if you guys can save money and put money away right now, I think it's the best time to do it, and you'll be vastly rewarded if you guys can do that. And it doesn't have to be a lot, just a little bit here and there. You guys see me when I do my videos. I don't put a ton of money away, but I do focus on, every other day, even if it's just once a week, maybe sometimes, just putting whatever I can That's free cash I have in my accounts inside my stock portfolio, and it vastly has been paying off. So I do encourage you guys to do that. And once again, we don't know how long the dip is going to happen. It could be a couple months, it could be for another year or so. But when the recovery does happen, we will vastly benefit from it. So once again, just focus on buying. Remember, it's always good prices when things dip. But anyways, guys, I just want to do a quick little update on that. Hope you guys enjoyed today's video. Let me know what you guys think in the comments, and I'll see you guys later.